Hello traders, welcome back to my channel. Today we are looking at scaling in. So first and foremost, before we even get into like the nitty gritty stuff, I'll just explain to you what scaling is in the most simplistic terms, okay? Basically what scaling in means is that, okay, we're actually on the 15th, so I'm going to go to a higher time frame. Basically scaling in, you guys, is when we enter a trade, okay? Let's make this line black. And we're entering at either a major resistance or major support area, okay? And the reason that needs to happen, the reason it needs to be a major level, is because we want to scale in on long-term trends, okay? There's no point trying to scale in a, small trend, like from here to here. There's no point trying to do that because there's not enough room to do it. So let's go backwards. What is scaling in? Well, in the simplest terms, it means we enter a trade, okay? And instead of just entering one position and kind of riding it out, to wherever we end up. Obviously, if you took a trade this long, if you went this long, you would have secured partial profits anyway. But instead of entering one trade, what we're doing is entering a series of trades, okay? So we start by entering our first trade. So we see rejection and we enter. Now, we would probably enter around up here, right, at the break. And as we enter, okay, price comes up and we get a pullback and we have another kind of area that we can enter now, right? So we enter a second trade. Price comes up, pulls back again. We see another opportunity. We enter another trade. And the beauty of this is that we can enter multiple positions, okay? Securing profits along the way and essentially making more profits, right? That's essentially what scaling in allows us to do. So really, all scaling in means is that you're entering multiple positions on a long trade. Now, here's the issue with scaling in, okay? The issue with scaling in is that people often try to scale in too fast or too aggressively. So instead of like entering, let's say you entered with a big position here, okay? You entered with a big position here. And obviously this would be predetermined by your risk, okay? I always preach risk management. It's up to you to figure that out on your own, either by watching my videos or doing research on it. But, you need to have risk management mastered in order to trade at all, because you're not going to be able to keep money if you don't understand how to properly protect your capital. Okay, so that's the first thing I should say. So let's say you've entered this position with a big lot size. Okay, so I've entered this and we're scaling up. Okay, or we're trending up, and I see a pullback. What a lot of people will do is say, "Oh, there's a pullback. I'm going to enter another big trade." This is the worst thing you can do here. Okay. The reason being, you guys, Forex trading, and you guys know this, it's extremely volatile. It's high risk, okay? And the reason being, there is always a chance that price is going to come right back down through here and not go in the direction we want it to go, okay? If you have two big lot sizes, all right? So if you have two big entries, using a big lot size, if you have two of these positions open, you're now risking a whole lot more money, okay? However, if you enter a small position here, okay, it allows you some room, okay? Because the profits you've made from this entry point are going to protect you if you start losing here, all right? So just imagine this for a second. Let's say your stop loss is here. Okay. And price keeps going down and it hits your stop. Okay. So this is, you've lost a little bit of money here. Let's say let's look at it in dollar terms to make it easier. Let's say you lost $10. Okay. So you've lost $10 here. But because you entered with a bigger lot size, you still have this with this trade running, okay? Let's say, and I'm not going to do the math on it because I obviously don't know the exact movements here in pips. Let's say this is $100, okay? This is just arbitrary. I'm hauling it out of my ass. But let's say that you have $100 there, okay? So you lost $10. You've still got that $100 running. Hopefully you've moved up your stop loss to protect some capital and you're not out any money. Does that make sense? Like that's the simplest way to put it, okay? Okay, another issue with scaling in. So, and I'm going to start with the issues because I want to make sure you guys aren't doing this. People scale in oftentimes too soon, okay? So we'll get a move up, and at the first little pullback, they want to scale in and enter again, okay? A rule of thumb you should use, wait until you get at least a risk reward of 3, okay? And the reason being, let me actually bring up my position tool and show you what I'm talking about for those of you who are new. So let's bring up a long position. Okay, this is just going to show us our risk. All right. So we entered here. Our stop. Okay, no, it doesn't want to work for me right now. Our stop is below that wick, right? Always below the low wick. Okay. And our target is way up here, right? So our target is obviously in this case exponentially more because we're entering at a major support area and we're looking for a really long target. These targets you're not going to find day to day, okay? This is why scaling in is more appropriate on longer term trades and trades that you're not going to find all the time in the market. What you're going to want to do, wait until you have at least a risk reward of 3. So when this is at 3, okay, you can start looking to scale in more. All right. The reason being, so we wouldn't have actually scaled in down here. I was using that as an example, okay? I would not have actually scaled in at that point. The reason you want to wait for this, your risk reward, sorry, to get to 3 is because it's going to further protect you here, okay? So you're going to have enough profit from this trade, all right, that if we get some pullbacks after you've scaled in a couple times, you're not going to lose all of your money. All right. You're not going to lose all of your money. So that's the other big thing I wanted to point out to you. So what I would have done in this case, and the other reason you want to wait for it to get to 3, all right, is because it's going to give you confirmation that you're actually in a trade that's worth scaling in. Remember, we don't want to scale in mini trends like this, okay? And in this case, like we had the same setup right here, okay? Had you not waited to get to 3 to scale in, look at this huge bearish candle we ended up having, right? So it actually protects you a little more, ensuring that price is going long-term in your direction. So that's why I recommend that. So what I would have done here is waited for this movement up. You get a retest, you can enter around here. This would be my scale in, okay? And sometimes you're not always going to get multiple because as you can see, we ended up coming to here and having, this would have been our major support, okay? And I'm not going over like when to take profits and all of that stuff right now. That's not the point of this video, okay? But a point I will make about your target is that if you're scaling in, you really do want to only be using major support and resistance. How do you know if a support or resistance is major? The more touches you get, the stronger it is. So if we look back in time, okay, this level here is going to have a lot of touches, okay? Now, it would be better if we had marked it as a zone because you'd see the area, right? But if we go back in time, both of these areas will be highly respected. Now, because this is US 30, I'm looking at an index right now, okay? Let me try to line that up again. I'm looking at an index for the purpose of this video, and the reason being indices tend to give really strong trends, which are great for scaling in. And that's the reason I'm using it. You can also do this on a Forex pair. You're just not going to see as many opportunities because remember, it has to be a long-term trend. So if you need help, determining long-term trends, I've got videos on that. Go watch those. Again, that's not the purpose of this video. I wanted to just teach you what scaling in means and how you should do it. So the 3 things I want to reiterate, I don't want to make this go on forever. You want to scale in. The first thing you want to do is ensure that you're entering a major position or a major resistance or support position. Okay. That's the first thing. Step 2, your first position should be the biggest. And remember that you still have to account for your risk overall. Okay. So don't enter a position of, don't risk $1,000 here and $200 every other time you scale in if you can't afford to do that. So you need to predetermine how many times you're going to be able to scale in according to what's in your account and what's available to trade. Number 3, you want to wait for your risk reward to be at 3. Okay, because this is going to prove that we are in a trend that is able to be scaled in. All right. So it's going to go on long enough for that to happen. And it's also going to give you enough wiggle room that when you do get the inevitable pullbacks that will happen, you're protected. Okay. By your first trade. Your first trade is going to protect you because you're going to have profits locked in all the way up. If you don't know how to lock in profits, please look that up, or I do have a video on that as well. Again, I can't get into every little nitty gritty detail because this video will go on forever. Those are the big things you want to look at when scaling in. And really all it is, you guys, is riding the wave that happens, okay, in a long-term trend. So entering multiple positions on pullbacks. Don't try this on, day-to-day trades that are, if you're trading zone to zone and you're trying to trade from this area to this area, don't try to scale in on those areas. That's not the right way you want to go about doing this. You're not going to have enough, of a barrier with your first trade to be able to protect yourself. So remember that risk management is number 1. I think that's all I have for you guys. If you like this video, please comment and subscribe to my channel. I'll see you in the next one.